Hey everyone, welcome back to Corporate Decoder. Today we're diving into F5 Inc.'s latest quarterly report and trying to see if their stock is actually as secure as their application delivery solutions. Get ready, because the answer might just depend on how well you can understand accounting lingo. This report gives us a snapshot of F5's financial health as of March 31, 2025. So let's see if the numbers tell a story of growth or if there are any warning signs we should be aware of. If you enjoy this analysis, then make sure to subscribe. It really helps the channel. Also, we have a Discord channel you can join. First things first, this is a Form 10Q, which is basically a quarterly checkup that publicly traded companies like F5 have to file with the Securities and Exchange Commission. It's like a report card showing how they did over the past 3 months. Alright, let's dive into the numbers. We'll start with the balance sheet, which is like a snapshot of what the company owns and owes. One of the first things to look at is their accounts receivable, which is the money owed to F5 by its customers. This quarter, it's about $379, $6 million. Now, accounts receivable gives us a sense of how quickly F5 is getting paid. Next is their cash equivalents, which is basically the amount of money they have on hand. That number sits at around $126 billion, a healthy increase from last year. Having a solid cash position gives F5 flexibility to invest in new opportunities or weather any unexpected storms. Another important aspect of the balance sheet is inventory. That is their stock of products ready to be sold. F5's inventory is roughly $67.9 million. Another notable asset is goodwill, which stands at about $232 billion. Now, goodwill isn't about physical possessions, but about the value of things that aren't easily quantifiable, like brand reputation or customer relationships, especially those obtained when they bought other companies. On the liability side, accounts payable, that is the money F5 owes to its suppliers, is about $43.6 million. A manageable accounts payable is a sign of good relationships with suppliers. They've also got deferred revenue, which is money they've already received for products or services they haven't delivered yet. This is sitting at $1.2 billion plus another $722 million long term. This represents contracts they will fulfill later. Now, let's switch gears to the income statement, which shows how much money F5 made and spent over the last quarter. First up, net revenues total sales after discounts and returns, which landed at $731 for the quarter. When we break this down, $30, $37, $23, $7, $293, $9 million just from services. So services are making them more money than products right now. Of course, it costs money to make money. Their cost of net revenues, the direct costs associated with those sales, was $141 million, leaving them with a gross profit of $592 million. Then come the operating expenses, the cost of running the business, sales and marketing, research and development, and general administration. These expenses clocked in at $431 in $3 million. After subtracting those operating expenses from the gross profit, you get income from operations, which is $158, $9 million. Think of it as the profit they made from their core business activities. Then there's other income net, things like interest and investment income, which came to $12 to $3 million. Finally, after subtracting income taxes of $25.7 million, F5's net income, their bottom line, was $185.5 million for the quarter. This translates to 2.48 earnings per share. Let's switch over to the cash flow statement, which tells us how cash is moving in and out of the company. Starting with net income, which we already know is $312 million for the first 6 months of the year, we then adjust for a few things. There's stock-based compensation, which is a non-cash expense, depreciation and amortization and deferred income taxes, among other things. After all the adjustments, we can see the cash provided by operating activities, which is a very healthy $459, $49.49. Now everyone, then comes cash used in investing activities, for example, to buy property or acquire another company, which totaled $6 million. Finally, there's cash used in financing activities, things like stock repurchases, which totaled $244, $30 million. At the end of the period, F5's cash and cash equivalents stood at $1.26 billion. So the company has quite a large war chest to use for future operations and investments. Here's an important thing. They also capitalize a lot of the costs to get new contracts. These costs are amortized later. There have been some new accounting rules like ASU 2023-07 about segment reporting and ASU 2023-09 about income taxes. It will take time for the company to assess their impact on the financial statements, but it seems like they will change how these numbers are calculated and presented. F5 uses something called fair value to measure some of its assets. Basically, it's about figuring out what those assets would sell for in the current market. They've got different levels to figure this out based on how easy it is to find reliable prices. Most of their stuff is in level 1, the easiest one, which means they're using prices from active markets like stock exchanges. Overall, they're holding around $636 million in investments, mostly in very liquid short-term instruments like money market funds. Time to talk about commitments and contingencies, which basically means promises and possible problems. In the normal course of business to facilitate sales of its products, the company indemnifies other parties with respect to certain matters. It is not possible to determine the maximum potential amount under these indemnification agreements. Now, F5, like most big companies, is dealing with some legal issues. There's a case involving Linwood Investment, who claims F5 infringed on their copyright, but the courts seem to be siding with F5 so far. Let's see how F5 is doing in different parts of the world. Their biggest market is the Americas, especially the United States, followed by Europe, the Middle East, and Africa, and then Asia Pacific. Most of their long-term assets, things like property and equipment, are located in the United States. Time to talk about what the company is doing with its own stock. In October 2024, the company's board said, let's buy back $1 billion worth of F5's stock. This can help boost the stock price. Since then, F5 repurchased around $125 million of their shares in the last 3 months at an average price of $2.59, buybacks and future opportunities. F5 outlined potential speed bumps like economic downturns and other issues. In short, things can change quickly. Last but not least, no executives bought or sold company shares using pre-arranged trading plans this quarter. This is usually a good sign. Now, what's my take on all of this? F5 seems to be navigating a complex market pretty well. They're sitting on a lot of cash, so they have room to make strategic moves. However, some risks are worth keeping in mind. With changes in technology constantly happening, F5 needs to adapt and keep innovating or be at risk of getting disrupted. Their cost of revenues is pretty high too, so they need to focus on becoming more efficient. Overall, F5 seems to be on a steady course, but they need to stay agile and innovative in order to stay ahead of the competition. Alright, that's our breakdown of F5's latest quarterly report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.